Hello everyone, welcome to the channel. Today we're going to be looking at TSM, the company. We're going to be doing a deep dive into it. I would just want to first state, if you clicked on the video just to know about what fact I'm talking about TSM, I have that timestamped in the description. If you check that out and want to jump back to where we are now, I would appreciate that as well. But just in case you're just here to want to know what that thing is that I have in the title of the video, I have that linked in the description, or timestamped in the description for this. But anyways, we're going to be doing a deep dive into TSM, a little bit deeper than like kind of the basic stock analysis that I do, where I do give opinions and stuff, but maybe it's not as in-depth. We aren't diving into financial statements and all that. And I just want to talk about TSM. I absolutely love this company. It's my number one holding. It's probably going to be my number one holding for a while. So, but just in case you have no idea about TSM, basically they sell semiconductor parts. So they're basically they give the blueprint to AMD, Nvidia, companies like that do the higher level chips and all that. So AI chips and things like that are included, GPUs and stuff like that. So anyways, yeah, so 1 year 112%, phenomenal. 5 year 284%, and if you take the 2022 lows, it's tripled since then in just 2 years. So it's on an incredible run, right? And I expect this company to continue to win. Maybe not triple over the next 2 years, but they've done well. So I mean, actually, they kind of hit insane lows. I mean, they were just so undervalued. I would have bought so much if I had the money, but I did not. So you can't be upset about those sort of things, right? So PE is 32, seems high. Forward PE is 27. I mean that's a little bit higher than S&P 500 right now, but it's a tech stock. It's been growing phenomenally well. It's such an important company, right? We'll look at their profit margin, which isn't incredibly impressive, but they require so much capital to dive into, and we're going to look at some of these tabs as well. So in case you don't know, they do semiconductor stuff. I mean, they're 100 billion, 900, or basically $1 trillion company. I mean, this is some serious level stuff. They buy products from AMAT, Applied Materials, and ASML. You may have heard of both of those in the AI space as well. They're popular stocks. They're the even level before TSM gets them. So they use those equipment and things like that to develop their stuff. Yeah, I guess one of the things of the business is it's very capital intensive and things like that. So let's look at some of the, that's the dividend. It does pay a decent dividend as well, honestly. 1.29%. So they've been beating pretty consistently. So they've actually beat the last 4 quarters. Let's Google real quick. Earnings. See if we can get a little bit before. Yeah. Let's dive into 2023. See what they got. It's still only showing the last 4. Let's look at 2022. Yeah, I mean, so it's still not showing it. That's stupid. But anyways, why won't Google just give me what I want? I should have pulled up the tabs beforehand, but it's not a big deal. We're going to look at some of the financial statements. Here, let's do that right now. So in 2021, that's earning per share. I much prefer revenue. Let's look at revenue first. So 56.8 billion, 33%. Insane, right? And actually, the stock price was lower, right, during this time, and that's because they were looking ahead. So one thing I'm sure many of you know, but in case you don't know, stocks are generally forward-looking. There's many stocks that say, wow, we did great this quarter, guys. Unfortunately, over the next year, we're not going to do that well, right? We're going to do mid, we're not going to do great, and stock prices will fall. They will fall even though, like, look at this. So you can kind of see the chart in the background. It's not exact numbers, but when they were, honestly, I think if we pull this up here, they were beating. This right here. This is when they were low, and then this right here. This is when they hit the highest. They hit the high mark. They hit 76.1 billion in revenue, right? But they were looking forward. They were looking at this, right, where it wasn't great. They were looking at 2023, so they were down, and then now they're looking forward again, so they're up. So that's when they started climbing. And 2025 is also expected to be good. We're going to look into that. They don't release that far, but the secret in the title is going to be that my prediction, at least. It gives a good example. Here, I'll just say this. It's going to give a good forecast for the next 2025, for all of 2025, really. Yeah, so 76.1 billion increased 33%, went down 8%, went up 26%. So when TSM was at about 100, right? And that's when I was like, it doesn't make sense. Basically, what they were forecasting, growth-wise, was they were expecting TSM to grow about 20% profit dash revenue. It's different, but about the same, right? Over the next 2 years. So first year, so 2024, they're going to grow 20%. 2025, they're going to go 20%. And then it projected growth of 2.5% for the next 3 years after that. This was on Yahoo. I don't know exactly where I found that at, but that's what it was saying. People were projecting. I'm just like, that doesn't make any sense. I don't see any year, anyway. So it might shrink, right? But this was like, the economy is not doing great. People are not buying chips. That's like the gaming crash. Everyone bought gaming PCs during this, right? But now it's not as much PC reliant. AI chips have really taken off over the last year and a half. As well. But even then, it fell 9%. That's only after it rose 33%. So, if you take the math, you grow. Well, we can just do it here. 56 to 56.5 to 69.5. 56 times 1.25. I think it's a bit less than that, right? Yeah, it is. No, it's about almost exactly right. 56 to 69, right? 25% increase. So even though it decreased 9%, 25% increase over 2 years is about a 12.5% increase year over year, year after year. It's a little bit less than that, right? Kind of. I don't know. Whatever. I'm getting into semantics. There's a 1 or 2% difference that I think I'm off by. But the point being, right, that even though it shrank, the insane growth coming. It's because it's just and 12.5% growth. I mean, that is great, right? If that's like the low end recently, that is phenomenal. Right? Because the S&P 500 grows, well, more over the last 15 years, it's grown closer to 11 or 12%, but generally it goes 10%. So if you're hitting 12.5% every year, that is awesome. That is awesome. That's what you're looking for, but it's been more than that. If you include the 33%, 8%, and then the 26% this year, and it's probably going to be about 25% next year as well, I think. I think so. I don't know that for certain, but I mean, I don't see the demand for NVIDIA falling at all. Cash flow year over year, I think that's a bit less important. Earning per share. So earning per share increased dramatically. I think they also had really good profit margins during that too. Fell dramatically and then is up about as much. So I think on the profit side, it's even more. Yeah. Let's look at quarterly. Right. You can see where it hit its highs. I mean, we still haven't had a quarter as good as Q4 2022. That is a phenomenal quarter. But if you look at it, the bigger picture, and I guess we're barely into the year. This is just quarter 3 expectations. All right. What is this? This is earnings per share. So revenue. Revenue is a bit better. So, like I said here, they had better profit margins here. The margins were just higher because revenue is actually higher than it was. So even though Q3, Q4 technically were higher than anything we've had, Q1, Q2, revenue is higher, and it's pretty consistently higher. And, I mean, like I said, it had records here, and it just shrugged it off. The price, it did not matter. I mean, you can see a little bit of correlation, right? Bump there. It's like, wow, those were pretty good quarters. But if it's not consistent, right, it doesn't really matter, right? Like, if let's just say I had a company. This is an extreme example. Well, let's say the company's called Intel. I don't know why I just made that up, right? But you give it, let's say it's worth, 100 billion, right? It's like, and then all of a sudden they announce, hey, we're going bankrupt in 5 years, right? Like, on the trajectory we're at, we're doing terrible. This share price is going to drop a lot. And then they're like, the next quarter, they're like, hey, you know what? We got $1 billion in cash, but we're still going bankrupt in 5 years, right? Or, 4 years and 3/4 of a year. You're going to be like, I still do not want anything to do with this company. Now, of course, the company's not going to come out and say we're bankrupt in 5 years. They're not going to do that, right? But, the example is, it doesn't really matter what happens on any given day, on any given quarter, on any given month, unless it's long-term baked into the picture, right? Long-term growth, right? Because at the end of the day, while trading dictates a lot of short-term moves, right? What actually matters is consistency, consistent growth, because people are looking at, where is this going to be in 5 years, right? Like I said, the extreme example, if you just give $1 billion now, right? It's like, well, we still aren't really probably going to do any better in 2 years. No one's really going to care. And, people say earnings don't matter. And this is why people say earnings don't matter, because they see stuff like this and like, it doesn't matter. But it's more consistent. Yeah, and one earning doesn't matter. So if we look here, revenue for Q3 is projected significantly higher than anything we've had. And we can look at some of these, growth rates. Yeah, annualized. So it's pretty consistent, 3 years, 17%, 15.9%. It's just a really good growing company. 16% annualized 5-year growth rate. Cash flow, obviously cash flow is higher than. It looks pretty good. It looks good as of recent, right? And considering the long-term upward trajectory of this, it's not like a company that's had a huge collapse. Like, I don't know, look at Bank of America or something like that. I think it's Bank of America. Yeah, look at a lot of banks before 2007. Almost all of them are just down, man. It's just crazy. But yeah, so let's take a bit of a look over here. Shows you some market cap over the years. This is, I think, it looks like quarter by quarter. They do it every 3 months. Yeah, pretty consistent upward trajectory. PE. Yeah, you can see the PE was much lower back then. That's what's a lot of the growth has been, but people were not expecting it to grow as dramatically. And I mean, that just shows you in 2023 how cheap you could have got it. I mean, a lot of it was baked in. You're baking in those earnings we're looking at, right? You're baking in this, right? But it's like, we don't think this growth is sustainable. It's not going to happen. And then they're like, hey, we're doing pretty good. And it's like, oh, crap. So you're always going to get swings like this in the market. That's why people, it's so hard. I'm going to make a video on this eventually. It's so hard to not let your emotions dictate things, right? Because I owned this stock. Let's go back. I bought this stock right about here, my first time. I bought a little bit lower here. I just didn't have the capital load up too much. So I bought here, and I held all the way through. Because I believed long-term this company was going to be fine. What they do, I believed in the vision. I believed in all that, right? So I held through it. Even with some incredibly, I mean, man, you could have got this literally. For this stock, you could have been paying half of what you'd be paying now, based on value. Literally half, and this wasn't long ago. This was a year ago, almost exactly a year ago. A year and a couple of days, right? And it's just when the market's cheap, but often this is when everyone's panicking. Everyone's saying, "Oh, the market's going to crash. Oh, companies are never going to do good." But yada 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 yada. I hate that kind of talk, right? And it's true. Stocks may be down for a while, but like. Man, good companies like TSM, it's just, it's tough. It's tough, but I don't know. I don't really care about price to sales, price to book. I mean, it's fine. Usually, price to book is more important with I don't know, companies that are maybe not doing as good. It's just another valuation metric, right? But and there you can get really into the weeds, like management effectiveness, return on assets. I mean, that's important, right? Return on equity. Here, this is what I like: profit margin, operating margin, right? So, I mean, in terms of like here, let's pull up NVIDIA, everyone's favorite company. Yeah, profit margin 55%, and that's just insane. You do not see that every day. So, one of the things with TSM, I covered it in my other video. It requires a lot of capital. It just does. It requires a lot of capital to build these stuff, and the profit margin's never going to quite be there. They could milk this profit margin, they could, but it would probably do long-term damage. And TSM, they're not dumb. They're long-term focused. And you have to have good leadership in this market. We will break that down a little bit later. But you have to have good leadership. You have to. So important with any company, but certainly one of this size and this. Yeah, so that's mainly what I wanted to look at. So profit margin isn't phenomenal. It's not bad, right? It's not bad. But a tech stock, it's not even bad in that context. But it's never gonna be like NVIDIA, right? It's just not. It's never gonna be quite like AMD, right? It's just not. It never will. And they may increase it a little bit, but personally, honestly, I care much more about revenue growth as long as you're maintaining profit margin roughly over a few percent in profit margin. I think increases in profit margin tells me you're being more efficient, right? You can get some few percent out of that. But think about it. I am a long-term investor, right? Think about being a long-term investor, right? If you can increase the profit margin, we can do profit margin first. If you can increase profit margin 5% over 5 years, right? Or you can increase revenue and maintain profit margin the same by 3% every year for 5 years, what is going to do you better? It should be revenue, right? I think so. Certainly over 10 years, right? You can only increase profit margin so much. It is finite. You can do it, and don't get me wrong, it makes a difference, right? But if you're 3%, higher on your profit margin, well, I guess it depends on what your profit margin is, right? NVIDIA increasing at 5% versus TSM increasing at 5% is going to be a lot different because you're increasing revenue, you're increasing profit by a different amount. So something like Walmart, right, increasing profit margin by 5% is a huge deal. Costco, I almost said TSM, Target, something like that, where profit margins are razor thin, certainly after all losses and stuff are accounted for. They have a huge theft issue for things like Walmart and Target, but that's a bit in the weeds. But just generally, like, just a 3% increase on profit margin that's permanent is great. It is. But it's not like something to die for. I like how my example with the profit margin, I'm pretty sure it's wrong, right? It's 38. If you increase that by 5%, you're actually, I don't know. And it's complicated. I'm trying to do it in my head and I don't have a calculator, but anyways, the point being, 1 or 2% profit margin. I'd rather just see more growth as long as the growth is not at the cost of profit margin, but so let's look a bit more at, let's go back here. I don't want valuations. I want this. This is what I want. Total assets 3x since 2019. Liabilities, honestly, so this is how you know the company's good. When did they increase in debt? 2020, 2021. What happened in 2021? I don't know. To be fair, they probably got Taiwan loans. I'm not 100% sure when inflation kicked in and when rates shot up, but I would assume it'd be about the same time, because that's usually when inflation started kicking in for everyone, right? So clearly they grew a lot, right? They borrowed and they borrowed. They borrowed and they looked ahead and they said, hey, this costs a lot of money to build these factories. They're building factories, and there's one in Arizona they're getting starting. One in Japan that's just starting to get operational. I guess we can dive into that now just while I'm on the topic. It takes years to get... They have to have these huge factories for this stuff. They have to train so many people. Even after it gets started up, it takes about, it went to me, at least 3/4 of a year to hit levels where they're pretty productive. So they just started the Japan plant earlier this year. And we're only going to really start seeing revenue come in from that, towards the end of this year, when it's starting to, okay, this is probably the revenue we're going to expect. But even then, you don't really know. Arizona, they started building, I believe, a couple years ago. And I think that's going to operational 2026. They delayed that. So that is one of the negatives, right? It takes so much time and capital and stuff to build it up, which is a negative. Profit margin's not always there. But it's also a positive, because who the hell has enough capital and time and energy and expertise to do that? Who? Intel or Samsung? We're going to look at that, right? We're going to look a bit at that. But they borrowed. They borrowed and they looked ahead and they said, we're not going to be able to borrow during this. Or if we do, it's going to be way worse rates. They borrowed, and then they've borrowed a little bit, but comparatively, they borrowed 14,000. Well, 14,000, that's... It's in thousands, but for this metric, so it would be, I believe, 14 billion. Values are in millions, except for, so it should be, they borrowed 14 more billion. So they only borrowed a couple, 1.7, and then a little over 2, which is nothing for them. Like that, this for the company operating at this size, that is like nothing, right? That's like you getting a 500, I don't know your wealth, but it's nothing. So, you can even see that on the graph, right? But assets increasing, total assets increasing. That was a really nice vocal. I can't even think of the word, guys. That's how brain dead I am right now. Vocal. It wasn't vocal fry. It was puberty moments, I guess, right? Operating expense, operating income, net income. So this isn't year after year or total. This is just each year. So they 3x'd in 2022. A little bit down last year, remember, but this should be probably right up around 33 again. In the future, we should be seeing more of that. We don't need to dive super deep into the weeds here, right? All I'm seeing is grow, right? Grow. All the areas you want. They're even getting loans. They need it. Like, it's just a company that looks great. Like, it's hard to see. So I'm pretty sure we dive into this, right? The name's Taiwan, but I guess Taiwan, that is a risk people worry about, right? Taiwan get invaded by China. China wants to invade them. I don't like to get into political stuff on this channel. This is more geopolitical than political. So we'll do it, and it's important to the company. I personally don't really view it as a big risk, and here's why. Well, reason number one is if you are genuinely worried about TSM being invaded, and so you won't invest in it. If you own any share in NVIDIA or AMD or companies like that, any cent, and you say you won't buy TSM for that reason, you are ignorant. You just are. You are. Because if TSM, the well dries up there, you are screwed. And yeah, I know they're building plants in Arizona, right? But that's not going to be operational, and it's not even the highest end tech, right? Because this is one thing I do not like, is they are trying to build their higher end stuff in mainland Taiwan. So like 3 nanometer, 5 nanometer, generally that stuff is being built in Taiwan. So all the new NVIDIA stuff they develop, maybe they could use some of the older stuff, but even then, it's going to hurt you dramatically. And when everyone finds out, if you're a panicky person, that thing's going to shoot down like a rock. I don't care how much money NVIDIA's making right now. If people realize they can't get anything from TSM, it's Jover, bro. It is. So that's point number one, right? And also, if you own Google and Meta and Apple's kind of doing their own, right? Microsoft, and the reason is one of the main reason is AI stuff. You think they're going to win on AI stuff, or any other company you think is going to win on AI stuff using NVIDIA or AMD, and you are not investing in TSM for that reason, I'm sorry, you are ignorant. You just are. Because that well's drying up. Unless you think they'd have enough bought already that it's fine, but I work in basically a data center. It's actually a Bitcoin mine. And I'm sure things do not break as much as the Chinese miners, right? Chinese computers. But I'm telling you, they break. And it's not going to be good. It's not good. You need to replace stuff. Things is always breaking down. Infrastructure's breaking down. It's a constant cycle. And if there is nothing going in, then, and people are going to panic. So that's point number one. Point number two, if you think about it logically, right? Russia's military was supposed to be better than China's. Most people agreed, right? And they invaded Ukraine. And whatever your opinion on the Ukraine war is, no one saw Ukraine lasting longer than 5 weeks. They've clearly lasted much longer than 5 weeks. I mean, they're still fighting right now. If you think China can pull off a successful military invasion of Taiwan over the open sea, while America was warning Ukraine well before, and they have a land border, right? Imagine how much aquatic equipment, how much planning, how much amassing of troops you'd need to do a naval invasion of Taiwan over that strait. It's much bigger than what was done over D-Day, right? I know equipment's better, but also landing on those beaches, right? Against modern military equipment, modern satellite that the U.S. is going to give. That's not even if the U.S. Sides with Taiwan, which they likely would. They would likely go to all war with China. And China's got their own problems, man. Their economy's not great. They have the demographic issue. I mean, imagine. It would be the worst decision China's ever made, right? They already have a horrible demographic problem. They're projecting to have only like 600 million people by 2100. I know things change, but like that's like more than halving, right? It might even be closer to 500 million. So they're basically Japan and Korea just a step behind in that sense. So I do not think it's going to happen. I don't think it makes any sense. I think, honestly, for that whole situation, Russia invading Ukraine has been the best thing that ever happened for it, because China's looking at that, what happens to the Russian economy, how the invasion's gone, and saying, I don't want anything like that. But they still want to posture about it. So that's that whole thing covered. You can disagree with me on that, by the way. I don't mind. But personally, for me, I don't even really equate it as much of a risk. I equate it more as like shipping overseas and cutting the profit margin and whatever. But I mean, TSM is basically the Taiwanese economy. I'm exaggerating a little bit, but ESG, I don't really dive too much into that. I don't factor it much as an investor. Yeah, their moat is insanely wide. I give it a 10. Basically, no one can do what they do. They do have some people. Let's look into some of that. Samsung. Basically, foundries, right? Which is what TSM does. It's such a tough business. I like how War Thunder is basically like all over this page, which is fine. They know I'm a gamer. Yes, so basically, from my understanding, I don't know this that well. I was not really paying attention at this time. I was actually rather young, but AMD basically went bankrupt trying to get into the business, right? Intel is trying to get into it. They're aiming for profitability, or excuse me for misspeaking there. They're aiming for break-even point around 2027 for their foundry business. If you try to take Intel's word for it, right, they usually do not hit what they're going to say. I would guess, and being generous towards them, I would guess for break-even around 2028. That's if they don't go bankrupt before then, right? But if you take them at their word, it's 2027, which 3 years? Is that early 2027 or late 2027? Who knows? I don't, right? So, yeah, there's that. And then Samsung debating selling off its manufacturing arm as 3nm yields remain low and the Giant's chip and the chip giant's stock price drops. TSMC keeps the ball rolling, which is TSM. Healthy competition would be better for whom? I disagree. As long as they have good leadership, competition doesn't matter unless for the company itself, right? For the consumer, generally it does. So for Nvidia and AMD, would love another person they could buy them from. But for the company itself, unless your leadership sucks and your product is going to deteriorate and they're trying to just squeeze every dime out of this they can, having crappy competition is the best thing you can ask for. The best thing. There's a massive yield wastage for each successful chip produced. Transistor count matters little. The money and capital required to keep up these ever denser transistor counts will be too much. No one can do what TSM does. They're trying to get on their level. They can do it, but they're not making any money. The report doesn't paint a pretty picture as Business Korea predicts an operating loss forecasted to reach 500 billion won, 385 million, for the non-memory business division. Samsung is losing money. They're losing money. That's the best competition to TSM. They are losing money. Losing a lot of money. 385 million is not a lot. I mean, it's not a little. Like, that is so much. It's so bad they're thinking about selling it or spinning it off, whatever this says, right? I don't want any of those videos. Yeah, TSMC's 3nm loads seem to be doing better. Yeah, because they can actually sell them for a profit because they're actually a good run company. Samsung's not a great run company, personally. I haven't looked at it in a while. Not a fan. TSM's doing great. Samsung is not. Video might be playing, so I'm going to get rid of that. We'll look at that a little bit later. It's so hard to do what these guys do, but they've succeeded, and they're rolling it. I guess that is a risk, right? If they get bad leadership, right, it could be really downhill. This may be a stock with, when not if like overall factors, but if they start missing, right, a year, right, they start missing, they're like, oh yeah, we're gonna do good this year, and then they don't. If they start trying to squeeze dimes out of it, cut corners, maybe I don't know, but it's something. It's so hard to see it because usually when you can see it, everyone can see it, right? So, I mean, that's why it's always important to have diversification. But if TSM starts losing, they could become a not so great company very fast. But is that a risk I'm willing to take? Absolutely. You have to decide that for yourself. Let's take a look from TSM's website. This was their last earnings, so this would be this guy right here. They actually announce monthly earnings. They do that in Taiwan. So usually earnings reports aren't super, except people usually look for guidance and all that. So I don't do the conversion in my head, but we can look at, we're going to have to go to quarterly revenue. So this equates to 20.8 billion, right? They have it in their own Taiwanese currency. Year-over-year second quarter revenue increased 40%. If we look here, they had a particularly weak quarter. It was actually their weak quarter since 2 years prior in terms of revenue. And it increased 40% year over year, right? So this is extreme. But even if you look at over quarter, like this is an increase. This is the best they've done ever revenue. Not as much earning, but that's just because they had those insane profit margins at one time. Compared to the first quarter of 2024, second quarter results reflected a 13.6% increase in revenue and 9.9% increase in net income. And we can see that reflected there. That's good. 13% over quarter is insane. Yeah, so it's 20.82 billion in US. Gross profit margin for the quarter is 53.2, operating was 42, and net profit margin 36.8. I believe it was the high 50s during this time. I'm doing that off the top of my head. So one thing they do, you heard a little bit in the Samsung article, they try to fit it into a lower and lower amount, transistor count into a lower and lower amount. So I don't know how big, I know how big a nanometer is. I mean, I couldn't like map it out for you. It'd be incredibly small, but incredibly small. But advanced technologies find a 7 nanometer and more accounted for 67%. They do great at the advanced, right? They hold just a stranglehold on the advanced. Second quarter, 3 nanometer accounted for 15%. 5 nanometer accounted for 35%. So you'll see this increase more and more. The smaller and smaller counts will. So 17 for you'll generally see it go more and more towards this. But one thing they're doing, and we'll get into it in this. Let's look there now. So let's dive into. This is the thing I talked about in the video. The headline. Okay. This is a question in the earnings call. So this was after the normal presentation. They dive a little bit deeper. People ask questions. They answer it if they want to. Okay, I think last time we talked about this, maybe a couple quarters back, you mentioned we expect to see supply to kind of rebalance. Supply demand to reach balance by the end of this year, 2024. Because this was the last earnings call. You can see it, 2024. This was the one in July or June or whatever. Just wanted to see, what is your current remark? How do you think about supply-demand balance for AI accelerator and CoWoS advanced packaging? That's just speak for, more of this. Supply. Now that we're in the middle of the year, blah, blah, blah. So this dude, they do speak Taiwanese, so he's just trying to rephrase the question, so we ignore that. Chief Executive Officer. So this is, if it reads funny, that's why, because I listen to it. I'm a nerd. I listen to this stuff, and I love this company. But so if it reads weird, that's because he doesn't natively speak English. So I also tried to reach the supply and demand balance, but I cannot today. The demand is so high. I had to work very hard to meet my customers' demand. We continue to increase. This is so bullish. Because they're literally saying, we cannot produce as much as we can sell. We could, whatever it may be, we could produce 50% more, and we could sell all of that. So that just tells you that the biggest limiting factor on TSM, the earnings, the PE, the chart growth, it's not demand, right? When, for example, AMD on gaming chips, right? Like, ideally, you want to get to a place where you can make more than you can sell, because if you can't, you want to produce more, right? Or let's make it really simple. Apples. I'm sure most of you understand, but just in case you don't, right? If I have an apple stand right outside my house, I have 100 apples out there. If someone comes up and is like, I want to buy 3,000 apples, I'd be like, oh, okay, well, I have 100, right? But it's like, okay, well, tomorrow, bring me another 2,900 apples. I'm like, I don't know, bro, my apple tree's there. They're picked dry. This is all I got. I could get you maybe 50 more, right? They literally, they can't produce enough that they can sell. And that should say for NVIDIA and for AMD, right? And things like that, so those AI chips. There's room to grow. That means those guys have more demand that they can sell. So, which one specifically, I don't know. And that's for you to make. Also should be bullish on AMAD and ASML. For what time period, right? I hope sometime in 2025 or 2026. It's so good. It's so good. It's so good. 2025 or 2026. You're telling me it may take them a year. It may take them 2 years. It may take them because it's middle 2024, right? So middle 2025 would be a year. Middle 2026 would be another year. It's super generous, right? On our point, but a year and a half, a year and a couple months. No, because this was because we haven't gotten any of the earnings this quarter, and this was done in July. So 2.5 years, he said, the most generous, right? End of 2026. That means they cannot produce. He thinks I can reach the balance in 2025 or 2026. So if we're talking about the middle there, that's at least 3/4 of a year. And if he's saying 2025 or 2026, it's probably towards the later of 2025, right? And if they can get the supply up, they're still implying that there's a high demand there. So if they somehow can reach the supply, it's still implying that they'll be able to sell that amount. So, right, it doesn't really matter. Let's just say that whatever that amount is, right? If they reach it in early 2025 and they increase 50%, right? Or late 2026 and profit revenue increases 50%, it doesn't really matter. It doesn't really change anything. I mean, other than you get it a year earlier. And demand may increase more than they think. But he's saying he can reach this demand. It may even be more. You're talking about growth in rent, increasing cost. Well, now it's out of my mind. I mean, we continue to increase whatever, wherever, whatever I can, okay? The supply continued to be very tight all the way to probably and how we can be eased in 2026. The supply continued to be very tight all the way to probably and how we can be eased in 2026. So that doesn't read perfectly, but I think what it's saying is it's going to be very tight. That is today's situation. My gosh, dude. Doubling supply. Okay, so next year, if I say double, probably I'll answer your question again next year. Is more than double okay? We're working very hard, as I can say, whenever we can, whatever we can. They are working hard to get as much supply to meet the demand as possible. I don't know how you can't be more bullish than this. They've already increased, right? They're already looking to increase. Well, I'm so excited I can't even annually. They're already looking to increase 26% this year. They can't hit supply and they're supposed to double it next year. What do you think that is? They're going to, unless there is some other economic factor. I am convinced in my brain they're going to increase at least 20% next year. Right? Let's do the math. 57 billion times 1.2. Right? Even if they do a normal growth next year, 12%. The year after that, I mean. So 2026. Dude, it's just so great. It's insane. It's insane. So there's one other thing I wanted to look at in this. I don't know if I can find it. They talk about margins here. He kind of shrugs it off. He says, we may. I don't know. They're looking, they want that profit margin we saw in 2022, which is what we were looking at earlier. The earning was insane. It's going to be even higher than this year just because the margins were higher, even though revenue's better. Long tab. I don't know if I can find it in here. Nah, that's not what I'm looking for. They were talking about it earlier. What did they? They're talking about the 3 nanometer N3 instead of. So basically, I'll explain it even if I can't find it. Yeah. We believe actions will help TSMC on a sustainable, healthy return, so we can continue to invest in technology. Talk about our N2 and N16 introduction, our 2 nanometer and 16 technologies. This is an industry in addressing the sensible need for energy efficient computing, and almost all the AI innovators are working with TSMC. This is the other thing that if you are not bullish on AI, you did. Basically, this is what TSMC is saying. They're saying that, so this is a $1 trillion company. And they're saying their main goal, 2 nanometer is obviously smaller than 3 nanometer, but one of their main goals with it is addressing energy efficient. They're trying to make the chips more efficient, but also more energy efficient. Usually what you always try to do is make it, transistors, pack transistors into smaller and smaller areas, right? 3 nanometer, 5 nanometer, 7 nanometer. I just did it inverse, but you're going from 7 to 5 to 3. You're trying to shrink it, you're trying to shrink it, you're trying to shrink it, you're trying to fit more into smaller, more into smaller, more into smaller, right? You can't really make them more efficient, right? I'm a CS major, and generally they're just used like transistors, gates, right? NAND gates, whatever it may be. That at the end of the day, it's just something really simple, but you're just trying to fit more and more of it to have more computing power. That's why quantum computing is such a crazy idea, because it flips that switch, right? It's no longer like the simple thing. Like when you think of technological advancement, right, you're thinking like often things are more advanced, right? It's better version, right? Not that it's not better or more efficient, because they are trying to do that as well, but generally it's always been like more into less. I mean, the first computers they were entire rooms, right? And they were super not efficient at all. And now you have a phone in your pocket. That's, they always say it's better than the computer that sent people to the moon, which it is so much better, but that's just like, so anyways, that's a bit of a tangent. And almost all the AI innovators, they're basically saying what we're trying to do is we're trying to make our chips more efficient for AI people. So another $1 trillion company is like AI. So now, if you don't think it's a big deal, then you think if it's not a big deal that every single person is just throwing money at this and trying to adapt to it, I don't know. And I can tell you, I know. I mean, they say it right here. But even if you didn't believe, they're just saying that to fit it in there. I work in a Bitcoin mine data center, whatever you might. It's the same thing. It's just with Bitcoin instead of other computing. And dude, the amount of energy I live in a fairly small. If you live in New York, this is called a town, right? It's not a city, but I live in a fairly small city. I'm not going to dox myself, so. Everyone has a different picture of how large that city is, but we are not a particularly big. Like we do less than 10 million in revenue a year. We have good profit margin, but less than 10 million in revenue a year, and we use as much energy as the rest of the city combined. Normally, they use so much energy, guys. They use so much energy, and they're trying to, and they dive deeper. 10 to 15% speed improvement, power 25 to 30% power improvement. Same power, 5 to 10% power benefit. They're trying to make them more energy efficient. They're making them more efficient and more energy efficient. That is like their main goal. Dude, it's just wild. They're adapting. It's years down the road too. This isn't like next year. Like 2 nanometer probably won't be online until 2026, 2027, some of the stuff that they're researching now, because the amount of time it just takes to build up that stuff. Yeah, years and years and years and years. But no, it's a great company. I mean, clearly you can see they're trying to adapt, they're trying to improve, all that stuff. So, I don't have a whole lot more. Let's look at some of this stuff. We didn't look at an analyst analysis yet. A lot of people say hold. If I didn't own any, I'd be DCAing in. Yeah, it may go down a little bit, but this company's just gonna win. They're gonna. If you're worried about the valuation, they're gonna keep making money. I think so. I really do. There's a chart here. I always struggle to find it where you can see. You can see the board members and how other things rank. But I don't think that's holders. I guess if you care about holders. Held by institutions. FMR LLC, JP Morgan, Sanders, Capital Investors. I don't really care about this at all. I'm going to be completely honest with you. I don't even know what sustainability means. I would assume environmental, right? Don't care about options. Don't care about holders. I'm not sure exactly where it was. Maybe community. Oh no, that's just people talking about it. That's what you got me for. You don't got to worry about that. Anyways, if I'm starting to just click on random stuff, it probably means it's about time to wrap. I do not want to show you guys my account. That would be so bad. Probably have to edit that out. Not that I care that much. Let's go back to TSM. Okay. Yeah, I think that's about all I've got, guys. So, I love this company. I love it so much. I really do. It's done well. It's going to keep doing well. A lot of the growth you've seen is, it was undervalued, but we're going to keep seeing growth in this company. You're never going to see like, it's going to 3x in 2 years, right? Although it's almost 3x in 2 years, but that's mostly because share price was down. Then share price caught up. So, but this is a great company. It's going to make money. It's at the forefront of everything. This is like almost like the credit card companies that just year after year they beat, but they're going to beat by more. Beat. That's the bad phrase. Credit card companies just keep growing it. Like the MasterCards and the Visas, just year after year after year after year after year, they just quarter after quarter after quarter, they're growing, right? And it's so consistent. I think TSM is going to be like that, but even more so because it's tech, and they're going to have better growth rates, and they may even be able to demand higher profit margin if the AMDs and the Nvidias, especially the Nvidias keep winning, and those are just the two I think of personally. So I'm also bullish on ASML and AMAT. I'm going to be loading up on those companies very shortly. Both are off of all-time highs. TSM's a little bit closer to all-time highs. But anyways, I assume if you made it this far in the video, you clearly liked something about it. I mean, I guess let's look at this real quick. Schwab thinks it's going to do well. If you care about what other people think, that's great. But they think it's going to do well over the next year. But if you made it this far in the video, you probably like something about it. I appreciate you watching it, listening to me ramble about this and show you some stuff. I appreciate you watching. I mean, I do want to grow this channel, but if there's anyone that enjoyed this and spend their time listening to this, like, it actually makes my day, and seeing like the watch time go up and all that, just like, hey, I'm making these videos and I'm sharing, what I think, and maybe people aren't as good at this, or they just want to have someone go through the numbers with them and see what they think about it. Like, I like talking about stocks. I love this sort of thing. But if you made it this far, leave it a like or something like that. It really helps the algorithm a lot. Like videos, I see a substantial increase in analytics if someone likes a video. And I've had that a few times. I've only really got likes on a few videos and they've gone up. That correlation, causation, whatever, But I'm going to make videos like this, similar companies, all different types of companies. So if you want to see more stuff like this in the future, subscribe and just stick around. But I appreciate all of you that have made it this far. You are a real one for doing that. So I'm going to wrap it now. I hope all of you had a good day and continue to have a good day. So I'll catch all you guys hopefully in the next one. See ya.